And
good afternoon. Welcome to the Educate2Trade Podcast with me, Chris Pollock.
And me, Z.
How you getting on, Z? Not seen loads of you the last couple of weeks.
I've not seen you for a couple of weeks, Chris. And in the last couple of weeks, a lot's happened in the market. You've been away on holiday. I've had sort of a few days off. But we left it off at a cliffhanger because we had a few different things that developed around the world. We had the big, beautiful bill. We had
it's beautiful.
Always beautiful. Always beautiful. Always great. And we left there with that sort of Trump tweet about the big beautiful bill. We talked, and then I think with Ikjot last week you covered the Elon and Trump spat.
The levers tiff of all time. Yeah, the most powerful man versus the richest man, right?
Absolutely. So we left it there, and since then, so I'm catching up with people. Trump, Elon's apologized for his acts.
Power's stronger than money, it seems. Yep.
Absolutely. So he's been in line. He sort of, tracked back on what he said. Because he said a lot.
Yeah. He
said a lot, and it hit the markets. And it was we're coming into the weekend. Bitcoin took a hit. The S&P took a hit, and all equities took a hit. So we left it off there. He's apologized, and since then, like we started this week, sort of coming back to ranges. We've had a few sort of datas come in, such as unemployment claims, and as things start to look rosy, we hear about the war.
Yeah, so it's not been a good day today, has it? We're seeing more geopolitics kick off in the Middle East.
Absolutely.
Yeah, maybe that's a good place to start having pretty nasty price action in stocks. But yeah, there's been strikes from Israel on Iranian nuclear facilities and counter strikes. Apparently 100 drones sent over, which they're denying, but I mean, who knows in the fog of war. Nevertheless, the market's reacting to this stuff, right?
The market's reacting. So what we find is whenever we laugh at it, whenever crypto hits a $4 trillion market cap, there's always a war haven sort of that follows, and that's what happened since last week. So this today, particularly, what we've seen is the war has really taken a hit on sort of the dollar index. DXY has been down, equities have been down, and then we see the opposite happen with gold and oil.
Well, oil especially, that was incredible. 1 o'clock this morning, it was up 13% on the day, $9 on the day at one point. I mean, it's given a chunk of it back, but yeah, that is a monumental move, right? Iran is, I think, 3% of global oil output.
Oh yeah.
So that could all just be, not all that. A big chunk of it could be disrupted. Reduced supplies, economics 101, right? Reduce supply, save demand, prices are going to go up. So
absolutely.
Quite as aggressively as that, I was surprised, I have to say. That's kind of like war in the Ukraine stuff when we had moves like this before. So yeah, what a move in the middle of the night. Obviously not for me, more for you. You're a nighttime trader.
Absolutely. I was taking trades at 2-3 a.m. for sure. So yeah, the headline on the Guardian was oil and gold prices soar after Israel attack on Iran, right? So crude oil is up, gold is sort of had reached the sort of 3,400 region, and it's going up, and the dollar's looking to go down.
Yeah. We talked about gold yesterday on the morning calls we do in the office. We're saying that you might want to keep an eye on gold into this weekend. We knew that this was kind of simmering and sizzling in the background. I didn't expect it to escalate quite as aggressively as it did. But if you are, like the market is, long stocks, people don't sell all their stocks on a Friday and buy them back on Monday, right? It's too hard to do if you're like Cathie Wood in the ARK fund with billions of dollars worth of assets. Maybe some of these fund managers think, you know what? My little hedge is going to just buy some gold, take some gold home for the weekend. So yeah, Friday gold trades, into Friday is not a bad thing when geopolitical uncertainty is around, and it worked this week for sure.
Absolutely. So when it comes to price, gold has sort of made a top at sort of 3,442, come back to 3,442, and sort of resist off there. We see sort of Brent crude oil sort of touch 73. And doing the same thing. They're making highs. So we're seeing that. And then when we look into the sort of like the dollar index, I think, if I have it here, so the dollar index is sort of taking a short. But it's sort of like the other thing also adding to this sort of movement is the unemployment claim numbers. Were you able to see that this week?
Yeah, more bad numbers. Yeah, we saw those figures come out along with the PPIs, didn't we? So 248 was it on the claims? It's not looking particularly rosy for jobs in the US at the moment. We obviously had a negative GDP print in the previous quarter, kind of getting towards the end of this quarter now, right? So have they managed to drag themselves out of the dirt to avoid a technical recession? we shall see next month. But it's going to be an interesting one.
So yeah, I'm so unemployment claims when the numbers came out, the dollar went from like 98 into the 97 region. S&P also took a big hit here. I had sort of active strikes here with CME data up here. I was marking for a short, but we got the short straight, not straight after, but we sort of got it in the night of unemployment claims. We saw it go from 6,050 all the way down to 5,940, 5,939. So we're sort of pulling back from there, but yeah, unemployment claims has hit hard.
Yeah. I feel like we're in an interesting place with the stock market. So we're running into the June option expiries next Friday, right? A week today. Yes. So when we kind of wrapping up at the end of next week, we'll have kind of seen where we are with that. But often you kind of see extremes into the option expiry. You get like trend continuations often into the week of option expiry. Mm-hmm. And until this news tonight, I was expecting this trend to be up, right? And a little squeeze into that option expiry. Mm-hmm. I still think that could happen, in spite of all this, just because of the flows. But after expiry, that can be when like the trapdoor is opened and then the real trade kicks in. And when you think about what's going on with all the refinancing later in the year, we've got plenty of bad news out there anyway. The stocks are nearly back to all-time highs. Mm-hmm. It's pretty frothy considering tariffs are still there. And, Trump was saying even this week he's going to send out letters over the next 2 weeks to his various trade partners and maybe tell them the terms of trade that he's going to give them if they want to accept it or not. Otherwise, he's going to revert back to the pre-April 9th numbers, right?
Yeah, the tariffs are still in play.
Yeah, and we said this mid-April. We said if he can just keep his mouth shut, these markets are going to go up. And they did. But we said with about a month to go, this is when you start to get into that little squeaky bum time moment. Mm-hmm. And I think, every week that goes by now, we're getting closer and closer to it. It's going to come to a head at some point if deals aren't done.
Yeah, no, absolutely. So a bunch of traders come in through the week and they ask, Z, how do you look at the markets? Mm-hmm. And how do you see it from a fundamental point of view? And I told them it's sort of from a technical point of view, we have our levels, right? Where the strikes are, where the call put options are from all the data that we see from CME. So I have those levels up. And all these sort of news events are sort of hitting these levels, like we see here with sort of the S&P. The S&P, I had sort of 60-80, sort of a sort of a level here. And what we see is we react from these levels. And I want traders to sort of think the same thing, because I think they sort of take the emotional side of like when they're looking at news, they're like, they expect eruption, they expect a short to happen really soon. But shorts don't just happen like that. They sort of have to hit levels. Just like the unemployment claims, we didn't just short the Nasdaq. We longed into these levels, like 6,050, and then we sort of shorted it from there. So, have you been through that with sort of students recently?
Yeah, I think one of the interesting ones again, it kind of links a little bit back to this option expiry thing I was talking about. Mm-hmm. Not the CME data, but the CBOE, SPX stuff. This 6,000 level. Zoom in on this a little bit so we can see it. This 6,000 level has just been a really large level in the monthly expiries, right? So this is another reason why I feel like this sell-off we had today may not follow through, or it may still bang this drum at 6,000 again at some point. Hasn't quite reached it yet today, maybe it will. But, on these days we would just tag in on news into these levels, tagging on news again into these levels. I'm not even on news, just on flows on this occasion. But these were like really big levels banging into 6,000, and this is going to be a big tipping point. It's a price that you probably want to mark up on your charts for the next week. Those contracts will expire on Friday next week, so the effect of those will then go away. But in the meantime, that's a level where you probably want to be potentially taking trades or targeting for your targets, depending on which direction you're trading. I feel like these option levels, and this is kind of, you talk about levels in trading, a lot of people draw lines on charts and things, right? Like trading 101. I prefer to get my data and levels just from the market, from volume, from option exposures, gamma exposures, from order flow, imbalances. Just let the market tell me where I think it needs to go. And then it's just a case of a waiting game, right? Trading is a real game of patience. And then just waiting for these things to happen. It's maybe the hardest bit for a lot of new traders who want to get into trades, right? And like, what do we do here? What do we do there? Well, 90% of the time we do nothing, right? But when the time is right, you need to strike.
Absolutely. With me the last couple of weeks, one thing I've been doing is I've been creating AI agents, because I think that's the future of trading. I think We have a fundamental thinker, we have a technical thinker, we have a person who sort of sees in between the lines. And what I've been doing is I've been sort of prompting GPT. I've been showing it levels, I've been showing them sort of exo charts, I've been showing it a bunch of different things that I've been sort of playing around with. And what it does is it sort of simplifies it, shows me levels of absorption, levels of sort of ranges, levels of highs, and then sort of daily highs, weekly highs, monthly highs. And then when we and I sort of update that data every 24 hours. And I think the new trader that we see coming forth is going to be that sort of agent.
Yeah.
I think that's something new traders should start looking into, because
it'll simplify things a little bit going forwards. I think if you can do some, let the AIs do the legwork, and then ask them to explain it to you. Right. That's the other thing, and they can. These AI agents are amazing. So.
They can. So I'll give you an example of that. So when sort of we had this one active strike level of sort of 6,080. This is something me and a few folks we talked about, and we didn't understand why it gave us that sort of level. What you can do with GPT is you can go back and prompt it. Could you explain why you perceive this level to be important? And then what GPT does really well is describe you, show you visual stimuli, shows you screenshots. And I think that's the new way of sort of learning on the go.
Yeah.
So you let sort of GPT break down the levels, you feed the data, but then you also have it make you understand those levels. And I think that's something that you sort of, that new traders should look into.
Yeah, and I've seen like people use it as like a trading coach as well, right? So when you are trading, some weeks you do very well, other weeks you may struggle, right? Tell it your struggles. So yes. You are the best trading coach in the world. I've had this week. What things would you tell me? And these things can keep you on track, right? It's just, you're going to have good weeks, you're going to have bad weeks. This is kind of the final frontier of trading, right? Once you've got a good risk management strategy, which is pretty much non-negotiable if you want to be successful long term, plus you pick your strategy, of which there are endless strategies you can pick. But in the end, once you've got those two right, it's only your psychology that's going to mess you up. So if you can keep that psychology work going, and you don't have to pay someone $100 an hour or whatever to talk it through with you, or go speak to a counselor, you can get ChatGPT to do it for you. Maybe I used to watch that movie Her with Jacqueline Phoenix. It's kind of like since this AI thing has kicked off, I think I need to kind of tune in and watch that.
I think we're still off that. Yeah, I mean, like we're there. We're halfway there, but we're not fully there yet. I think
you're not marrying ChatGPT yet. No?
Not completely. Completely. I still think consciously, and I think others should also think consciously. The thing with GPT is like what I find is data is changing every 24 hours. Where I would feed GPT data once a week, but now to get gamma levels, to get these sort of obvious data that we want, you have to still feed it. And I don't think we're there yet. But yeah, do use it as an assistance, but do still look for a trading floor like ours. Do look for mentorship in that way, because we're still far apart. AI completely taking over.
Yeah. Something else I wanted to talk about this week, kind of more news related again, was back onto cable, right? If we have a look at the UK figures, they were horrendous yesterday. I mean, one of the things that's really interesting with this is the fact that the pound just kind of shook it off. But look at this move from 7 in the morning. If I can bring up the, where are we on the Forex Factory? GDP figures in the UK were abysmal. Here we go. On Thursday morning, 7 o'clock, we had, wait a second, they aren't my figures. We're in May here.
Yeah, we're in May. I've been back tested.
Right. Yeah, no, it wasn't that good. Rachel Reeves would have taken that, that's for sure. No, we're here. We're at minus 0.3%. So the month-on-month figures were pretty abysmal, worse since 2023. 4 negative prints out of 8 now. So and the steep decline in the last 3 months has been noticeable right from this. It's difficult with COVID, right, to actually see this thing, but if you zoom in, we had a pretty nice print back there. Things were looking rosy in April, and then bang, bang, things are not quite looking so good since the budget. So yeah, we saw some horrendous manufacturing data, industrial production. It was only the construction output that could give you any hope at all. And yeah, these news trades have been really nice. I mean, that was you could have been 15 minutes late to this trade, and you still had another 40 pips to get out of it. But the market keeps pushing back. What do you make of these currencies at the moment? I know you said the dollar index is obviously on the back foot here, right? This is probably more of a dollar story than it is a pound story on the upside, you would say.
Yeah.
Where do you see the dollar going from here? What do you think's in the headwinds for it.
The way I see the dollar index is it's like the biggest pool that you peg against any currency. Even in cryptocurrencies, we say the same thing. The dollar index is still something that you sort of equate in the scenario. But right now, the dollar has been taking a hit. And when the dollar takes a hit, not just GBP, you look into JPY, you look into any other pairs, and you'll see they're sort of winning against the dollar right now. So it's a huge pool of the pie. So we do keep an eye on it, but right now I think GBP is winning it.
Yeah, and Euro's had a great run as well. We've seen levels not seen since 2022 now on these currencies. So yeah, who knew? Not a bad time to go to the States, apart from all the right.
Absolutely.
Speaking of which, it's the World Club Cup. I see you're in a Inter Miami top here.
Exactly. I want to see Luis Suarez and Lionel Messi and sort of the Barca sort of lads really show up.
Well, we'll call Suarez a Liverpool lad, shall we?
Sure.
And I guess the question is going to be who's better, Florian Wirtz or Lionel Messi? It's been a good day for a Liverpool fan.
Right, so we have a question.
Sure.
Do you think after Israel and Iran's updates, we could potentially see a spike in gold and USD pairs?
Certainly gold. I mean, there is an obvious inverse correlation typically between the gold and the dollar. However, during geopolitical problems, they often can go up together, or doesn't need the dollar to go down for gold to go up during geopolitical concerns. If you rewind back on the chart to 2022, gold rallied $300 in 6 weeks when the Ukraine war kicked off, and the dollar rallied with it, right? So there are times when both of these things can actually go up together. I'd be more interested in gold than I would be in the dollar. I feel like it's got a lot of punch, and it's a really good kind of late in the week trade anyway. So yeah, you probably want to trade news on this and be aware of the news and have some good news feeds, good scores coming through, so you can keep on top of what's going on. But yeah, I think gold, I mean, it has been all year. We talked about it all year. It's been a great asset this year. Yeah, I've got high hopes for it going forward. And it's just a shame, having been a gold trader for a long time, that it reacts so well to bad news like this. But here we go. This is the nature of the market.
Yeah,
what do you think?
I think when you have bad news, or you can say negative outputs, gold and oil are two things that I sort of keep an eye on, because those are things that sort of are safe havens, I would say, for investors. So yeah, you do get really good moves. You always see tops on gold. I think that's how gold made its high this year, right? The all-time high was because of like a few conflicts that sort of married into each other. We had sort of Israel and Palestine. We had sort of the minerals deal, and that's when you should be trading gold at those moments, because those are easy moves. And I think that's how I see it. I think when dollar is short, we always look into the safer assets like gold and oil.
Yeah, it's a good time to be a commodity trader. I think it will be with interest rates this high. This is typically a good time to trade commodities. So yeah, with yields up here, I think commodities could be pretty volatile going forwards. So yeah, tune into those commodity traders. They were had a good go in the mid noughties when China kind of got going. But yeah, it's been all about the stocks. But you might make more money in the next 10 years trading commodities more than you might the S&P.
One sort of comparison I'll sort of leave it off with is when we had sort of the Biden time. We have sort of the summer time to like really enjoy life. You went on holiday, but I would say the markets have been pretty volatile. For traders, it's been sort of impactful. Usually we have ranges. Let's say in the summertime, everyone's sort of at the yacht, taking a day off, or taking a month off, or taking a week off. But what we're finding is there's volatility every week with this Trump.
That is the problem. Normally the volumes die down even by now, right? I think in the States they're on their holidays already, right? My friend was over. Their summer holidays have started in certain states in the US, so the volumes will probably in normal years be down by now. But in a Trump world with geopolitical tensions, with tariffs, will they? Won't they? The taco trades. This could be a mad summer.
And
I'm away for most of August.
I'll be here. I'll be here taking every trade. But yeah, I think that sort of concludes it for today. I think we've covered all these impactful things and really put logic into these charts, because I think what happens with a bunch of news is people act emotionally and they think it was sort of long or short to their perspective. But what we see is levels, and I think that's what traders should always go back into and understand these levels, and then use the news as sort of a catapult into those levels. Yeah,
and I think news, if you want to trade news, and you can, you really want to be selective with the news that you trade. You don't want to trade every single piece of data that comes out, and even you don't want to trade non-farm payrolls every month, right? There's got to be a certain beat or miss, or you've got to look for certain things when it comes to the average hourly earnings, kind of pulling one way, the jobs the other. These sort of things create good opportunity for the stock markets. But the other thing is like time, right? I think you should, as a trader, try and learn more about the fundamentals. Most people that kind of walk through the door in here, they have a much better understanding of technical analysis than they do fundamental analysis. But you've just got to start on that journey. Like, you don't have to trade these things, but watch them, watch the reactions. You'll start to see patterns. Trading is about pattern recognition, repeatable patterns that you can rely on, whether it be from flows, technical analysis, order flow, news, earnings, doesn't matter. If you can find something that's repeatable, and even if you can't, then maybe wait for half an hour after the news comes out, right? Have that little time print, wait for it all to cool down, and then engage in the markets. You don't have to be have sweaty palms in the lead up to a CPI figure, as we were all doing in here in 2022. It was the best data release that I've ever known, and that was for a year there. That was incredible. So at times it's going to be good, at other times it's not, like anything. So I think there is still a lot to learn from it.
Absolutely. I think I'll leave it on one point, on the crypto side of things.
Go ahead.
Because people are still looking into alt seasons. So if we look at the charts here, everyone's looking to see their their Matic, their layer 2s, and all these sort of utility tokens sort of pump.
Oh, you told me about this before. Yeah. So where are we on this on the daily? This is the market cap.
Yeah. So,
dominance. Okay.
So this is Bitcoin dominance, and I sort of tell folks to look at this because whenever sort of Bitcoin is above 60%, we still see Bitcoin leading the way, and alt's not really pumping. And this is why, because Bitcoin dominance has sort of held the alts a little bit. For alt season to come, you need it to go below 55 to 50%.
Okay.
So we're still far off. This is something I've been advising a lot of crypto folks, is not to just go buying tokens, because we're still going to see a bunch sort of take place in the next sort of few weeks and months. So we're there. But yeah, everyone should enjoy their summers, learn fundamentals, learn ranges, and find a good trading plan.
Yeah, well, don't worry about learning it today. It's the hottest day of the year here in London. Let's knock this off early, and everyone else has already cleared out, I think. So we'll do the same. Thanks for joining us. Cheers, Z.
Thank you.
Have a good one.